Hi everybody, it is Shannon from AlphaTrends.net. Today is Friday, it's the 24th of April 2015. I hope you had a good week of trading. Let's look at the numbers. It was a great week for equities. The S&P 500 gained close to 2%, double that for the NASDAQ. Russell was up a little bit, as were the semiconductors and financials. Oil retreated just a little bit this week, and biotechs continue to be the strong group. So let's take a look at the charts and see what we have here. The S&P 500 is within pennies of its all-time closing high here, and as I had noted on Wednesday that it looked like it was heading for that level since we had broken that horizontal resistance right here. And the good news is that that resistance broken is acting as support. So for next week, I think that we go into the week still obviously looking at this market bullishly, and you could look at this again as a cup and handle if you wanted to, but the point is that the bigger level of support that we'll want to see hold next week is 210. We would get more cautious if it breaks below that rising 5-day moving average, but I think 210 will be the key level for next week, and we should expect to see continued higher prices as we are in a primary uptrend. The NASDAQ made its rally of 4% this week out to new highs, so the NASDAQ here, obviously the stronger group, again up 4% on the week, and that's what we were looking for in that Wednesday video where I said that looks like we're headed for all-time highs, and that's exactly what we have here. So it's foolish to try to short into this thing, and for next week I think our key level of support will be really around 109 to 109 and a quarter. Holding above that, it remains innocent until proven guilty. Back to that NASDAQ for one moment. It is a little stretched near term, and a pullback down towards that wouldn't be the end of the world, but it would be worth protecting. Obviously that is your gains if you just got involved in it. The Russell 2000 is becoming more neutral here, and it got back above this little level that's been a little bit of resistance this past week, and it seems to be holding it for now. We've got a rising 5-day moving average, and the bigger level obviously for the Russell 2000 is down here 123.75 to 124, but for next week I think maybe we keep an eye on this trend line as well, and that kind of matches up with about 125.50. So getting back above Thursday's high should see the Russell 2000 I think challenge those all-time highs. If it doesn't do that, then 125.5 will be our area where we want to get a little bit more defensive. On Wednesday, the semiconductors broke out and looked like they were going to continue to move higher, but they gapped down, and they are failing right now. So I just don't see any advantage at all to being involved in these semiconductors right now. It seems as though they're going to need a little bit more time to consolidate here. So I'm just really not looking for anything in these. I'd say that next week, disasters avoided as long as we stay above 55, but it's really kind of more neutral overall. As are the financials, just really kind of a complete waste of time. I don't really have much to say about those except, there's no advantage to being involved in them right now. Shares of Apple behaved well. They did break that resistance that we were talking about and continue to move higher here today. Don't forget they report earnings after the close on Monday. If you're still holding, I would suggest if you just recently bought it, your stop goes underneath this 129.20-ish. The question is, will Apple surprise, or how will the reaction to earnings be? Will it be similar to what we saw on Amazon, which was setting up nicely going into it? It was showing strength, and then the news and the surprise occurred in the direction of the primary trend, and Amazon is up at all-time highs now, and Apple certainly has the opportunity to do that as well. I personally don't like to hold stocks before they report earnings. I think the risk is too great, but do what's right for you. It might end up being like a Netflix as well, and Netflix ran strong in front of earnings and then gapped higher, and it holds its gains very well. So again, it's all a personal factor of what you are comfortable with in terms of risk and what your time frame for engagement is in the market. Let's take a look real quick at oil. I'm going to stop talking about oil every week. I don't trade it. I've just been talking about it because it's been so busy and in the news. And the crude oil, over here is where we first started saying it has the opportunity to continue to move higher. It found resistance where it was supposed to with this prior support near that 54 level. It pulled back, made a higher low, and we said if you're involved, a stop goes below there. I would say your stop now goes below this level because it's gotten up to this prior resistance. then I wouldn't be surprised to see it pull back and consolidate a little bit. Bullishly, though, I mean, if you are still holding it, this is that band of resistance. We're looking at a 4-hour chart right now. The inverted head and shoulders pattern that we've been speaking about has an 11-point, from the neckline here. I like to measure these as conservatively as possible, but 11 points. Add that to the breakout point of 52, and that would actually suggest upward price objective of 63. So as long as it continues to hold the higher high that is most relevant for you, then I say if you're long, continue to hold it. But this is a pretty important level. Perhaps we can punch right through there and head up towards that 63 level. But again, I'm not going to continue to talk about oil because I don't trade it. And the bonds did break down briefly here and are trying to recover. So next week I would be looking at these bonds saying that if they can't get back above and hold above 129.5, 130, this is the expected band of resistance. If it can't get back above there, then you've got to be very defensive with the bonds. But for right now, we've got them below declining 5-day moving average and prior band of support. So the intermediate term trend is guilty till proven innocent, and it'll take a move back above 130 to change that back to neutral. And I'd say just be very careful with that group right now. Some stocks to keep an eye on. I would say that Amgen looks like something that has the potential to be able to continue to move higher. You can see it's been battling this general band of resistance in here, and it briefly broke it on Wednesday. But again, you have to ask yourself, how did it get there? It was already extended when it got there. It gapped up and has subsequently pulled back. Looking at a weekly chart, we're up at all-time highs here in Amgen, and it's time to look for this one, I think, to be able to continue to move higher. You could even look, again, I'm not the big fan of the patterns here, but you could look at this as an inverted head and shoulders. And if we take a look at a 30-minute time frame, you see we're holding right on that 5-day moving average. Maybe it's a buy above 170-ish with your stop somewhere down near here. Make the trade your own. I'm here just to provide an opportunity, and then you decide how to make it your own trade. And these are the stocks we talk about every day in Alpha Trends in the trading room. And for subscribers, Citrix broke some resistance this past week as well, and it holds on to its gains. So looking at a weekly chart, perhaps it comes up to test this longer-term downtrend line, and that's more of a band of resistance. So perhaps this one can continue. If we take a look at the last 2 days, it was up big and that gap down this morning and rallied. So it did find resistance, though, right at the 2-day volume-weighted average price. That is the average price for these 2 days. The market is below that, so it's going to need to get at least back above and hold above, I think, 67.5-ish to be able to think it's going to continue to move higher. But definitely worth keeping an eye on next week, as is LinkedIn. LinkedIn, these guys on a year-to-date here, they've been battling with that volume-weighted average price year-to-date. The stock is holding above that 5-day moving average. The VWAP since the event is just overhead at about 262.80. That is since that gap higher. And with this rising 5-day moving average and breaking a short-term level of resistance today, I'd say keep an eye on this one, maybe even above Friday's high for continuation, and then manage the risk according to your time frame. Another one to keep an eye on would be VRSK, Verisk Analytics. Of course, we are in the middle of earnings season, and I haven't checked the earnings dates on these stocks. So again, be aware of when they are due to report and decide for yourself whether or not you want to hold in front of earnings. My suggestion is to not hold in front of earnings, but again, do what you feel is right for you, and maybe you'll catch some of these stocks like Netflix and Amazon today by holding in front of earnings. It's all comes down to personal preference. Anyways, VRSK looks like it has a little bit of a band of resistance just above, up near that 73 level. So keep an eye for a break of that. Perhaps that is able to get it going. And this week we also saw that BABA, did rally here a little bit, after the gap down last week. It's the best case scenario is this stock is neutralizing, but there's still zero advantage to being long in here. The best case is that it's in a stage 1 accumulation, and perhaps we can see some momentum come back into the stock back above 87.5-ish. But right now, that's going to be too far away. In other words, if it got up to 87.5 next week, I certainly wouldn't be looking to buy it because it would be a little too far extended at that point. So So GoPro continues to be a dog here. Just, best case scenario is it's neutralizing as well. There's a lot of opportunities out there with trending stocks, so I'd say focus on those. Find the low risk, high probability entry points. That's what we focus on every single day in Alpha Trends. If you haven't, maybe take a 7-day free trial.